Hello everybody, this is Wieland Alt and I'm so happy to start again with you in our session. I really can't believe 3 months already, 12 sessions about trading, 3 levels, and you're still here with me. Not all of you who started, of course, but well, I always see and feel like, okay, if people really stick with me to the very end, they're serious about this, what they're doing, and it's what I really appreciate. And that shows a lot. It shows a lot of your accomplishment. It shows a lot of your determination when it comes to trading, and therefore, welcome. Yeah, and now we have like around almost 12. So welcome to the very last session in our webinar series, Learn How to Trade in 3 Simple Steps. We're talking expert level, and really I'm serious about this. This is the expert level because, when we were talking basic, it was really like, okay, what are financial markets? How can I place an order? What kind of orders do we have at all? A little bit technical analysis, a little bit about this, a little bit about that, but still good to go. And with advanced, we went deeper. We were talking about candlesticks, we were talking about reverses, all this stuff, money management as well. We were discussing this at expert level too. So a lot of things really, you would pay quite a lot in a coaching for this, especially with me. So I'm really happy that we have the opportunity really to do this for a no cost. So that's really cool. So thanks ActivTrades for that one, to invite everyone and making this possible. And we'll see. Hopefully we can continue this, starting with basic again. But well, we will be for another 3 months term. So expert level, what are we talking about today, guys? Still, I'm on the Philippines, and I again like to tell you my route where I'm going next. I will be in Jakarta for a couple of days just to meet some people and maybe doing some video recordings, something like this. So I'm really happy to be there again. If you happen to be there, just give me a sign, hit me up. And the same is true for Kuala Lumpur and Singapore as well. And then expect me to be from January on in South America, starting with Mexico and then making my way down south. I'm talking about Buenos Aires, Rio de Janeiro, maybe Paraguay. Yeah, for sure Paraguay. I mean, I live there somehow. And yeah, Peru maybe. So wherever you are, just let me know and we can for sure have a coffee or whatever they serve there. So I would be happy to meet some real life traders. So that's basically it. So what are we talking about anyways? Not just about trader lifestyle, not just about my travels, but of course, first of all, we talk about disclaimer risk disclosure, and it's just about that you please make sure that trading, especially trading leveraged products like CFDs or Forex, of course, contain a risk of losing money. So please make sure that you fully understand the risk. And if you decide to trade, of course, please understand that you trade on behalf of your own risk and your own responsibility. So if you all agree on that, I'm happy to continue. With what? With myself. Right. So this is me again. You already know who I am, what I'm doing. Yes, if the president, I'm still with Forbes and Newsweek Expert Forum, international speaker. I was doing, but I told you last time also, speaking here in Manila, and I will do also speaking in Kuala Lumpur and Singapore as well. Happy about this also. So this is me, but you already have seen my face. And therefore, what do we want to talk about? Of course, we're talking about how to trade a sideways market. So range trading and box plays. I mean, in general, I'm pretty sure we all are familiar with the situation where I feel like, oh my, I thought really it would go on forever, but now it reverses and it reverses again and reverses again and again. So actually, we're stuck in some kind of box or range. And a lot of people hate ranges. Why? Because they're trading trends. And obviously, a range is everything but a trend, right? So let's see how we can trade these. And of course, trend following, trend reversals, everything that happens in financial markets, usually we can easily define it, you know, like higher high, higher low, lower high, lower low, things like this. And we can also have countless strategies to trade them. Like, let's say, what we already covered is, well, 1 to 3, you know, like breakout strategy within a trend. At least if you have the beginning of a trend, this one can work quite well. At the end of a trend, maybe it will be a loser for a reason. I mean, if a trend reverses, but hey, then you can trade also the 1 to 3 reversal formation. I also already was talking about this. Not really clear, but if you read and hear between the lines, of course you got it. I mean, seriously. So there's no secret. And a lot of things like candlesticks, a lot of things like reverses, like formations, reversal formations. So you can trade like everything. But first of all, you need a trend, right? Trend reversal and trend following. It's all what you need first is a trend. If you don't have a trend, what to do? So, and of course, if you have a range, a lot of people just wait, okay, now I don't know what to do, so I wait until the price breaks out. And what happens pretty often, yeah, price breaks out just to make sure that you get faked into the move and you sit from the very first moment on the wrong side of the trade, right? So this is usually known as a false break. And of course, everyone hates that. I mean, how couldn't you? So, and of course, you know, usually people don't like it for a reason. They lose money immediately, where from the very first moment. Then they sit exactly on the most far away point from the stop loss, because if the price breaks on the one side, then your exit point with the stop loss might be on the other side of the range, and then you have to wait for, I don't know, a long time, of course, not minutes but hours, not a day but days, you know, until the price gets to the other side and you get stopped out. Or maybe not, price gets up again or down again into your favorite direction. So this is basically what we do. So yeah, we try to play the breakout, but of course we can do something else as well. We can also think about, okay, what is a trading box or trading range? I mean, this name doesn't come from, you know, from out of the blue. Why are trading ranges called trading ranges? Because you can trade from the top to the low and from the low to the top, right? So you can go from one side of the box to the other one. All you need to do is take care that you really exit your trade with a profit, right? And also, if you're on the wrong side of the trade, of course, that you exit your trade with a loss as well. And a lot of people don't recognize it, and they're not familiar with this. Why? Because they're so concerned about trading a trend. And we were talking about this a bit. I mean, if you watched carefully when we were talking about like a little bit our psychology, you know, and the perception filter, it's pretty clear. If you just focus on trends, you pretty miss trading ranges. And every time the price like makes a breakout to the previous trend, you just enter the trade just to see that you sit on the wrong side, right? So trading boxes, trading ranges are not that different or not that difficult, but they're different. They're different from a trend because they have other rules. First of all, trading a trend means that a lot of traders, they don't like to set like a profit target. They just let the market decide. If they move the stop loss, like a trading stop, from one low to the other in case of an uptrend, or from one high to the other in case of a downtrend, and then just with the first reversal, get stopped out and say, hey, market has decided. I'm not sure if something wrong with that. It's not my kind of style of trading. I like to have a profit target, but a lot of people do so. And apparently they are not that unhappy with it anyway. So whatever you like to do, you should be fine with that. But with trading ranges, if you don't have a profit target, you just see your money getting in, money getting out, and if you're lucky, getting in again. But you definitely want to have a profit target to exit your trade as far as you're in profit anyway, right? So this is one thing. And of course, what we also see is when you have a trading box or trading range, that it's not really like drawn with a ruler, but it's, well, it goes up a bit, it goes down a bit. It's not so clear, but from time to time, you really can see something that you feel like, okay, now I have some information, now you have some support and resistant zones. And that's what I like to use for an entry and also for an exit, right? So this is where we talk, where we want to, well, take over some action in order to open and close the trade as well, right? And of course, so how to spot a trading box? Of course, that's what's written here, that the price doesn't mark a new high or new low, but it just sticks somewhere around some support and resistant lines. And also, if it moves them back, it doesn't go far anyway, but also to the other side, like just a correction of the move and just going a little bit up, going a little bit down. So something like this is basically then going on. And of course, it's not really a trend reversal, it's just like a choppy market. And also, you can use Fibonacci retracements just to see, okay, how far can it go? For example, you know, that you have something where you see, okay, on these levels, there could be some turning point of the price movement, right? So also, and if you have the sequence of a move, counter move, you know, like impulse, correction, impulse, move, counter move, move. There are no new highs, no new lows. We can definitely see that we have a trading box. Let's see how it could look like. I have here, of course, you see the one, it's the S&P 500. Yeah, so where do we have some trading boxes? Obviously, here we don't have. This is clearly a downtrend. It's a daily chart. But let's see, maybe we find some in 5 minutes chart, right? Yeah, something like this, for example. So it's middle of the night. This is Europe time, by the way. Apparently, I'm from Europe, dealing a lot with Europe. So what we can do is, for example, yeah, we could use that one. See, this is clearly a range, right? You can mark this. Number Bollinger Bands pop up again. Hold on a second, like this. Here they are. Anyway, so we can have this as a zone. You have here some resistances. See, you have some supports, and it's pretty obvious what's happening here in this area, right? So we don't need that one. So what you see here, it's not really clear like this is the absolute high. It's just going a little bit more, a little bit more less to the upside. It breaks a bit, it comes back, breaks a bit, comes back, you know, sometimes it moves forward, backwards, up and down. And what I also see, and I will discuss this also in this very last session, see this one, pulse break. I mean, even if you trade it, you were in profit already. But if you don't take your profits somewhere, well, you end up with a loser, right? So that's what it is. That's why I like to take profits, right? So we can discuss this as well. And it's S&P 500. It's a 5 minutes chart. It's an E-mini future. So, and it's very recent. It's just from Monday, 21st of November afternoon with the opening, right? Yeah, with the market opening, market was choppy. So quite over sudden several days, like up to the 22nd. So this is a choppy market. This is a trading range, and yes, we can play around a bit with this. See, make it a little bit more wider, maybe like this, or a little bit more tighter, maybe like this. And this is also something what you define as a trader. So you decide for yourself, where are my resistance zones? And again, these are zones, right? And they can go from really like here, then you don't have any signals at all, right? Or you'd go like, okay, what is the most interesting area? Maybe this where you have all the highs, not the highs, where you have the opening closing prices, right, like here, and you have some breakouts. This is, you see also some candlestick action going on here. So this is, for me, this is the interesting zone, and the same is true for the downside, where you have just support. Where does it come from? First of all, like here, you see something's going on over here as well. So for me, it looks like, yes, this is where I want to place this line, because I want to watch at the top and the bottom what people are doing. Because this is nothing where you feel like, okay, this is like mathematics, 1 + 1 is 2. There's no negotiation in that one. With these lines, yeah, you can discuss those, right? And again, it's like, okay, do I have some more signals? Of course, with the risk of getting stopped out. Or do I like to have less signals? Maybe like here, you know, if you do this, you don't have any signal at all, right? And if you go like this, you trade like crazy, right? Like this, for example. You always get stopped out, you have like false breaks and things like this. But if you do this, where the majority of action happens and reverses happens, obviously market is pretty keen on watching these zones too, right? So that's why I recommend playing around a bit and see, okay, what fits really to me and what fits also to price action. And what you also can do, you can use the third one. Let's take that. You can use the third one. It sits in the middle. See? How's that? It still is true. See, it's the middle of the range here. And it's definitely the middle. And it's working, right? So I feel like technical analysis is always surprising how good it works. And of course, you can play around a bit with this too. No problem at all. So yeah, so that's what it is. And you can play this one. So this is what we like to put in our charts. This is what we can use now for, well, the rest of the session. So of course, we have to rethink. So once you see and you identify in the chart a situation like this, you say, okay, there's no trend anymore, it's just some kind of range. And what can you do with the range? Of course, you trade from the top to the low, and from the low to the top. So that's what you like to do. And also, we need to apply different trading techniques here, right? So it's not about trading breakouts, it's exactly the opposite. It's about trading reversals, and that's the interesting part on it. Me, I'm more the reversal guy, right? So I definitely like to trade reversals, and also why? Because trading reversals gives me a very good risk-reward ratio, and also it helps me defining some kind of profit target. Pretty easy. That's why I use the Bollinger Bands, by the way, what you saw for a second in the chart, but we don't need them now, and I don't want to discuss Bollinger Bands now with you, so that's why I just turned them off. So what can we do? So first of all, and that's a great risk that happens with it, if we take profits, of course, they get eaten up just by coming back. So, and what we also want to use, and I mean, it's pretty obvious, we were talking about reversal candlesticks as well, right? You remember? And that's what we see. What do we have here? Bearish engulfing. What do we have here? It's so, I will not say it's easy. It's not easy. You need to be educated. You need to be trained. You need really to know what you're doing. Look at this. Shooting star. Bearish engulfing. Bearish engulfing. If you're familiar with this, evening star. Doji, kind of like that. Not really anything, but still interesting. What do we have here? Not really something. So we have, of course, this is the next resistance line. So what do we have here? Same. See, hammer, false break, coming back. Okay, this is what we call morning star. If you want, it's a more, well, more wider interpretation, but still it's clear. Bullish engulfing. Yeah, it's a false break, false signal. That's bad for sure. This is where your stop loss is. But okay, fair enough. Second try, not really. I mean, this is what happens also. This is one loser, second loser. I really love that one. Here you go. And this is also quite a good example for what trading is about. You're not always 100% right, even though you might be right, right? So you're right. Yes, this is a trading range. Yes, this is a low of this range, how we defined it. But, well, you get stopped out anyway. You've been in profit 1-to-1, stopped out, get stopped out. Oh, this is really, you know, it's annoying, but it happens anyway. Second try, oh yeah, now it works. Nope, doesn't. Third try, wow, here we go. See? And this is what you need. You need maybe like a second or third try in order to make the trade. But just see also if you have a proper stop loss, and we are talking about candlesticks, you place a stop loss underneath the candlestick right here, right? So, all right here. So, and just see what we might lose here. Couple of points here, and see you are in total profit of these three already here, and everything that follows is an extra add-on bonus on your profits, right? So where's the target? Of course, first target I like to mention, see the middle, quite obvious. So this is one part which works here, see? So you have to be aware of this. This is where things can get shaky, not really a problem right here. Not really a problem right here, but yeah, you're in profit, you're not. You're in profit, you're in big profit, exit. So this is the reward of being brave. This is the reward of being fast. So you enter one time, maybe get stopped out, you enter second time, no stop out event, you might enter again and get rewarded big. This is trading, guys. So yeah, but see how many opportunities for a trade we see right here. I mean, it's 21st of November. It's like a couple of days ago. It's like beginning of the week. 1, 2, 3. You don't know already here. You don't know yet that this is a trading range, right? You just see this reversal. And if you like to trade reversals in general, this is what you do. So maybe you want to exit here. Maybe just want to follow it a bit. But then you see, okay, we have something going on here. And you see this reversal. It's also, it's not just a morning star, it's also bullish engulfing. So you want to enter here maybe, stop losses here. You see, 1, 2, 3. Now it's clear, it's a trading range. See, now it's clear. 1, 2, 1, 2, okay, see. So you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 opportunities to trade this range. This is something else. I also talk about this. This is very important to see. And also, yes, of course, you could trade this too. So let's be fair and say this is number 11, right? It's being stopped out. So let's say you would trade all of them. That gives you from 11, let's say really, okay, get stopped out here. 1, you get stopped out here. 2, 3. Maybe you said 1, 2, get stopped out here. It's 4. That makes 7 RK, 7 winning big, quite big, right? And 4 losers. Quite reasonable, short, just a short distance from the, you know, from your entry to the exit. Quite clear situations, no discussions, no worries about it. Everything is okay. And this is trading. So you have some losers for sure, but you have also some winners. And look at the winners. as a potential. I'm not saying that you're able from the very beginning to go through this. This is like really painful. But over the time, with experience, you say, okay, guys, I know what's happening. I'm here and I hold, you know, like 300, like, you know, back in you know, in Sparta, these guys hold the line, guys. And this is what you do. You hold the line. You have your defined situation, unless you exited here already. Don't know. So, and you get rewarded. That's what trading is about. Is it really comfortable? No, because you got some correction. You know, you start to doubt your position. But if you exit like really it's a high or the low, these are the points which are important, right? These are really situations which are important. And again, this is not a chart I just well, I was looking for hours to present this to you. It's a random chart, S&P 500 from Monday, 5-minute chart. This happens all over again. And see, you know what the funny thing is? Not this one. I don't want to have that one. But anyway, the funny thing is that, first of all, it sticks here. So I have to take this away. The funny thing is, look at this picture. It's the same, right? But this is euro. It's more or less the same. See? And it's euro, yes, dollar. It's a daily chart. Actually, oh, it's 2013. See? I mean, oh wow, these were the good old days. 136. Oh, can we get back to this, please? As a European, I would be very happy about this, especially when I'm abroad. Well, good old days. Anyway, so what do we see here? More or less the same. See the same situations. You have like 1, 2 points where you can, which you can connect more or less, a little bit more up, a little more down. But these 2 points to the upside, to the downside, you can connect, and then you have this range and see what happens. It's more or less the same with doji here. What is this? I have some kind of really spinning tops, but indecision. So maybe as a trader, you like to ignore it. What you don't want to ignore is this, some kind of bullish engulfing. You see this W coming up. Okay, might be a double bottom because you don't know about the range yet. So you think about, okay, price goes up anyway. So my profit target in general would be here. Okay, fair enough. Here we go. Oh, bearish engulfing. Let's go. Where? No, down here. Okay, here we go. We have impulse move, correction, impulse move. Yeah. False break. Right. Coming back. You have spinning top, doji, and then price moves up again. A little bit tricky. You don't need to trade this. I mean, it's sometimes also a matter of luck to be right here, right? But anyway, see this one, now you have this, oh, that's nice, it's a fake. Remember, this one was red. So what everybody expected was this, right? Everybody was expecting this. And this candlestick was the indication, it was red. So people jumped in, going short. What happened? Turned out to be a hammer. So everybody needed to exit the short trade and, well, become a buyer. And this is what happened. To the upside, 0.7. You have a harami here, maybe some kind of shooting star. I prolong it a bit. Now we have a shooting star, something like this. So you read the message, aiming for 0.8, and here's something special happens. What happens is that the price doesn't make the same low. It makes a higher low within a range, obviously. Is this already an indication for a reversal in terms of breakout? No. But it already shows that some kind of strength returns into the market. See? That's different. Low, low, even lower. Not that low anymore. What's different now? So we have some new support. Breakout, coming back, See, going sideways, next new support, breakout for good. Oh, and by the way, this is what we call a consolidation. And this is what we call a trading range. Why? You can't trade this, not in that time frame. You can go deeper and deeper and deeper into, let's say, 1 minute or whatever. Then you have this picture. But this is where you want to trade, and this is where you want to wait. Unless I have another idea of this too for you coming up, so I will show you later on. But this is what you really need to be aware of. Trading range, the name comes for a reason. It's because you can trade these moves between the lines inside of the box. You just go from one side to the other. That's what you do, or more or less, you know. Also here, don't be too greedy. Don't wait for the last point to get into your pocket. It's always something like in the area of, right? So into the direction of. So that's what you can do then. So delete this as well. And now let's take a closer look. Now let's take a closer look again into our chart. Recent chart, S&P 500 for Monday and Tuesday this week. So very recent, very actual. And it's the same happening here. So I already mentioned all the candlesticks, all the formations. And you see, that's what I like to point out. You also have already, I use M1, I don't want to have all indicators popping up again. See, it's the same. Here you might say, okay, it's the same here, but it's not. This is also this consolidation. Here you might say this one, but then this one kills it. So it disturbs the picture. So this is not something which is similar to that. And this is pretty cool, right? How to spot a situation where you feel like, okay, prices move to the outside, they break out. From my point of view, really, it's like, prices just halt somewhere. You can see this here as well. They halt here too. They stop, right? So you have usually you feel like, okay, then they return and they don't go higher. This is a false break. This is a return. This is a move to the downside, trying to go deep, but not being able to. And here we go. Breakout for good, testing the breakout. Boom, here we go, right? And now we have low, high, you name it. Higher low, higher high, higher low. This is the breakout. And also see how beautiful the test is. First of all, this one was a resistance. Tested 1, 2, 3, 4, 5, 6, 7, maybe 8, let's say 9 times from the downside, and now being tested from the upside as well. It's like closing the door, making sure that it's closed by just trying to open it from the outside, right? So this is what I really like to mention. See this. Do we have a higher high or at least a higher low? Let's say this. So now you see this one indicates, from my point of view and from my experience, this one can indicate a breakout. First. Second, let's see what I have on my slides. Maybe it's also written so that you see that I also have prepared it. All right, okay. So see, it's basically the same situation here, 0.8 and 10. It's more or less equal. And we're talking about 2013, completely different chart, different asset, different everything, and still the same rules, right? So what for us is the jam zone. The jam zone is really something that, well, it's like a traffic jam. Nothing moves really, you know. It's this consolidation. I call it here jam zone. I mean, if you call it whatever you want, but what you need to know is that trading in these zones doesn't make any sense at all. Yes, of course, you can go to a lower time frame, 1 minute chart or whatever, but please be aware that the movements within these jam zones, in these consolidations, are very limited. So let's go to that one. So what do you expect getting here, right? What do you expect here compared to this? It's ridiculous. So you don't want to trade this. You don't want to be here getting like 5 pips up, 5 pips down, and doing this the whole day. You go crazy with this. So in these jam zones, in these consolidation zones, all you can do is just sit and wait, have a coffee, and wait until the market gets a little bit more volatility again and finally finds its direction. So this is what happens. Because if you talk about these zones, consolidations, what does they say basically? They say that I'm not so happy about getting a little bit more up, but actually we're not happy about selling anyway, so we just wait. It's completely different. Like here, oh, we're not so happy with rising prices, so we sell. Let's sell a bit more. It's too cheap, so let's buy. Are we not so happy with the rising prices, so let's sell? Oh, we're not so happy with the falling prices, so let's buy. It's not happening here. And even though it's happening, obviously it's happening, but it's happening within a very, very, very short range. And you can't expect a big move. What you can expect is a break. Of course. I mean, someday it will break, and then you can see, okay, what happens after this. This is also pretty nice. It's a fake as well. So people feel like, okay, breaking out, making this move, consolidation. He has this big fat red candle. It gets confirmed also. And then you see this then you have this spinning top. You feel like, what? I just entered and I was so into this trade that it goes down again, but it doesn't. Instead of, you have a spinning top, sign of indecision, sign of, hey, let's wait. Maybe breaking to the downside is wrong. Hey, let's buy. You know? And then you have this, it's called also here. See? You have this W again. So see and really watch what the market is doing. And why, and ask yourself, why is he doing it? What is happening in the market? This is, if you have a candlestick like this, which says, okay, we're really into power, selling power is here. No, it's not. Okay, something is wrong with the trade then. If you're in a position like this and you see a candlestick, be aware that you might exit the trade. See, and so you get the opportunity here. Okay, maybe yes, no. Maybe I exit, maybe I just lower my position, maybe I exit with half of it, whatever, because what you want to see after a move like this is it goes down immediately, like boom, but it doesn't. So something's wrong, right? And at this moment, you might change your idea of that trade and reduce your position size, because what happens then is even more massive. So what can't be sold needs to be bought, obviously. So this is what happens. It's one candlestick, making everything clear. This is power, and the rest is what happens then, right? So yeah, let's go back again to this. So this jam zone or consolidation, please take care of this. Don't expect too much. Just sit and wait, have a coffee, whatever time frame you are in. I mean, maybe you need a lot of coffees, but so if you do daily chart, but if you're a 5-minute chart, just wait. Okay, just go to the toilet, have a snack from the kitchen. Oh, we're into price action again, so let's see what happens. Things like this. And also, what can you do actually with this jam zone? It's also very interesting. Yes, of course, you can wait, but also I was asking myself, is there any kind of indicator we can use? Oh, wait, we were talking about simple moving average, right? Yes, of course we did. And I showed you that one for a reason, because you can use that one as well. I have, again, it's Forex. It's a euro to the Hungarian forint. actually I needed really to look for a chart like this. So and I will never look again for another chart because it's so nice. You see the price action going down, and then you see like nothing happening anyway. This is a consolidation. This is a correction over time. We have to distinguish when we talk about correction. We have to distinguish between correction in price, what we have right here, price drops, and correction in time. Price doesn't move at all, but time moves. Obviously, I mean, time moves always. Not always for our, for our benefit, but whatever. Time moves. So the price stands still, just waits for time to pass by, then drops again. Same situation, stands still, drops again. Same situation, then sits there. So what can you do? How can you trade something like this? I mean, it's not a box. It's not a trading box, of course not. But still, you can trade it. But you don't want to be that guy, like having. I'm going with, over here we have the low. I'm going short. No, you don't want to go short because you need some kind of indicator. Maybe you feel like, oh, this is a low. This is a low. I'm going short. Oh, not really happening. Not really action. Not really action. Not really action. So you wait for hours, and if you're really unlucky, you get stopped out. Maybe, let's say here. I don't know why, but maybe let's say here you get stopped out, and you can have this even more comfortable. And this is even worse, right? So, oh, it's a breakout. Okay, it goes even more. So, and here you go. You sit there and getting shaked, and then got stopped out finally. So how can you solve this situation? So what can you do? Of course, I was talking for a reason about the simple moving average with you, because you can use that one too. Now look at this. Here it is. Now look at this. This is a simple moving average, 20, right? And if you apply this, what happens? And that's why I discussed the simple moving averages with you, because prices tend to return to the average, or the average returns to the price, like this case, right? Because if prices just correct over the time, by definition, the average goes to the price, right? So here, price goes far away, or away, define far, it goes away from its average, and then waits. It just waits until the average comes back to the price. And see, exactly at that moment, price starts to move again. It's like a dog running and then waiting for you to catch up. And this is what happens. And the moment you hear, hey doggy, I'm back, I'm here, give me a break, I need to breathe. No, booms. And off he goes. And sits there and waits and looks at you, waving, hey, I'm here, I'm waiting for you, and just run. Okay, I'm coming. Hey doggy, I'm here, and runs again. So I'm kidding, but I think it's pretty obvious, and you can use these examples too. So this is really what happens, and it's so remarkable that you see at the moment, simple moving average 20 gets touched, price moves. Gets touched, price move. Not here, goes over to a sideways market. Can't work always, some day or some minute this move is over, but it's worth a try maybe, and also it's of course worth looking at it. And still, if we go like short here, because price drops, let's say you use that one, that low, one of these, your stop loss might be here. Okay, you stopped out, so what? Not a big deal, because you have two huge profits. See? So again, you will not always be 100% right. Market decides, market defines your profits, but you need to have the right techniques to use them, right? So do we have this example, something like this here as well? And now, not really. Yeah, and I don't want to look after this now. I think you know the idea, and I also think that it's more important to understand this. And last, what I also like to discuss with you, how can you spot a false break and what happens after a false break? I mean, it's pretty obvious, right? And it's something that you can experience quite often, not really on a regular basis, like every time, but quite often. It's when the market goes with, and first of all, what you experience pretty often, that the first breakout is a false break. And if the break to the downside is a false break, where might it go finally? Up, and vice versa. So in general, and as we all have watched the markets carefully, price comes from the downside a bit, you know, and then moves slowly up and moves slowly sideways, and then breaks out here. So what you also can see, you can use that one too, right here. You can go that way, right? So again, you can play around a bit with these lines and see what fits best to the market and what gives you a lot of opportunities. And see, we change lines a bit, but still we have some cool opportunities for a trade, right? And therefore, these are not lines which are like visible for everyone. Every trader will use like a different level for the lines. Maybe this close or that close or the opening or the high or the low. It depends. I like to place them somewhere where really like the most action happened, because I feel like when the price comes back to this area, I expect some more action, right? For a reason, because it has been there before. Why shouldn't it be there now as well? And then you also see now this low is in the middle, which has been, you know, low, high, which gives it an even higher impact for us when it comes to visibility. You know, you can play around. And also you see after that test, how if you're familiar with this concept, low, high, higher, low, higher, high, higher, low. Wow. Right, and then you can go also, let's, oh my goodness, I see so many things. 1, 2, 3, whatever you do, if you have a trend, if it's strong, you do it all over again, right? Here, yeah, might build it too tight, so let's do it again. 1, 2, let's have that one. 3, okay, it's better now. See, this also happens. It's also something what you be aware of. If you have everything too tight, of course, the risk of being stopped out is higher, but your risk-reward ratio is also higher, right? Compare this to this, right? It's quite different. It's at least 2.5 times longer distance than here, right? So and you can continue with this until the trend breaks. So yeah, that's what I wanted to discuss with you. Let's look at the, we have already 50 minutes. Let's see. Yeah, and then we go over into this consolidation again. You see trading range, consolidation, and eventually it breaks out again. Now it's return with Bollinger Bands. Yeah, let's see how you can apply those, but that's a different story for a different time. And let's turn to our slides. So by viewing this, you see simple moving average, you see this breakout of this consolidations, pretty obvious. Again, it's not a guarantee, but hey, there's no guarantee in trading, but there are opportunities, and it's about this. So always use professional risk management. We were talking about this always and always and ever again. So professional risk management is the key for everything. Guys, that's basically it. Yeah, see, that's it. This is for me. that's it with our 12 sessions, 3 months. With the 3 months, I've been in Bangkok together with you. We were talking from Jakarta, from Bali, from where have I been? Oh my goodness, I've been in Australia as well, almost from a boat. Wow, now I can say I've done presentations from a restaurant, from a cafe, from a hotel lobby, from a lobby somewhere, like outside, from a balcony. I've been with you everywhere. I'm a trader. I can trade everywhere. I can work everywhere. I can travel as far as I want because, trading gives us the freedom to live the life we really want to live. And that's what I wanted to share with you. It's not just talk about trading and say, hey, you have to buy if you want to learn more. I shared everything with you because I want to share this. And yes, of course, you can keep on going. Life is for learning. I'm happy to assist you there. But with this, now, with these 12 sessions, you're almost done. You know a lot of stuff in order to trade very, very, very professional, more professional than most people do. And yeah, that's what I wanted to share with you. I hope you're successful with this. Please send me some feedback. I would be happy about this to my email. You already should be familiar with that one too, that I can use that feedback. Be happy about that. And again, if it happens to be that we're on the same area, just give me a note and we'll be happy. Yeah, I would be really happy to meet you there and have a coffee, whatever. Right? Okay, guys, that's it. Well, hard to say goodbye, but that's what we do. I wish you all the best. See you next time. And well, follow me on Instagram. Get some pictures from my travels. Trader Wieland, that's me. And see you next time. All the best to you. Bye-bye.